Is the cost capital or is it revenue? A good question, a question worth asking. The reason why it's a good question is last week I was approached by a client. She's wanting to sell her property. The property is held in her personal name. 10 years ago, she renovated the kitchen in the property and she expensed those costs in that year tax return and got some tax savings. She's now wanting to sell the property. Now we've looked at the picture. We got her purchase price, we got her costs of purchasing, so you have your stamp duty, you have your legal fees and the rest of them. And we've then looked into any improvement costs she's incurred. And in those costs is the kitchen. Now she cannot claim those expenses again because she's already claimed them 10 years ago. So now she's looking at the property has made her £50,000 profit in the time she's owned it. And her capital gains is then 50,000. But if she had held on to those expenses, which were worth £20,000 back 10 years ago, her gains from the property would have been 30,000 instead of 50,000. So at the moment, she's now looking at a picture of, if I sell my property, my capital gains is going to be 50,000 minus the personal allowance is £47,000. Instead of, it could have been £27,000. So when you're renovating, when you're doing any work on the property you hold in your portfolio, it's so important to understand and fully appreciate the difference between revenue and capital. The simple fact is, revenue brings the value of the property back to its original state. That is, repair a door on the kitchen, that is any cost a similar way. Capital, that is improving the value of the property, that is completely new kitchen, moving from gas to electric hob, if it's higher value hob, it's adding an extension to the property. Anything that improves the value of the property. It's the rule of thumb. So think about that next time you incur any